Do you want to improve your business's financial health? Do you want to stop chasing down invoices every single month when payment time comes around? On this week's episode, we're going to be talking about expert tips and strategies that you can use to manage your accounts receivable to make sure that you are avoiding cash flow problems. We're also going to talk about the tax tea of the week on this episode. A Calabasas man is going to prison for 17 years for stealing $35 million from investors. Stay tuned to this episode of Stuff Your Accountant Isn't Telling You. Welcome back to another episode of Stuff Your Accountant Is Not Telling You. I am Lola Turner, your host, and I am joined by Terrell Turner, my co-host.
Hello, everyone.
Hello, Terrell. Hello to the audience. Welcome back to another episode. We are on episode number 30 of Stuff Your Accountant Isn't Telling You. Cue and applause.
It's pretty interesting to get to 30 episodes of really just, the stuff your accountant isn't telling you. Because when we started this, a part of me did ask the question of, will you run out of topics? But then as we started digging into it and started talking to business, I'm like, there's a whole lot of stuff that accountants are not telling business owners. And so I'm just like, yeah, we got a lot more to go.
Yeah, that's interesting. I agree. I did think initially, are we going to run out of topics? But one of the things that I've learned and realized, I think for us in our accountant mind, I'll speak for myself in my accountant mind, I think I see things as kind of being sequential. So like this happens and then that happens and all of these things are connected. But one of the things that I'm realizing, the more and more we talk to business owners, the more and more we work with business owners, is for someone who didn't go to school for accounting or doesn't have an accounting and finance background, a lot of these topics just mean completely different things to each person or each business owner. And so you almost just have to take one topic at a time and dissect it. And I think for us, the whole point of why we even started the Business Talk Library in the first place was to basically make complicated business topics simple. That's our whole motto. And that's what the Stuff Your Accountant Isn't Telling You is predicated on. So we could literally go topic by topic, and I don't think we would run out of anything. So I'm excited to get to episode 100. But for today, we're just focusing on 30. But I think a good way to really dive into episode 30 and I guess quote unquote celebrate episode 30 is really to think about, we've had a lot of variety of topics on the show, right? We've talked about cash flow management. We've talked about, the importance of making sure that, you're increasing your prices. That was an episode we did very recently. The more important thing, I think also that I've seen a lot of business owners struggle with, Terrell, is just cash flow management, not really having a good handle on how they're properly managing their cash flow, the cash that's coming in, the cash that's going out. And this is one of those topics where we felt like it was so important for us to really spend time dissecting it. We had to kind of divide it into two. So on this week's episode, we're going to be focusing on accounts receivables. And basically that's just money that you have performed a service for, or money that you are billed to your customer that you are waiting to get paid for. So Terrell, when you think about accounts receivable, let's unpack that a little bit. What are some of your thoughts on accounts receivable as it relates to the small business owner?
Yeah, and I think in general, when it comes down to accounts receivable, the way that I tend to explain this to business owners, this is money that rightfully belongs to you, but is in somebody else's wallet.
I like that. It's yours.
Someone else
rightfully
is
belongs to
holding
you. You've done the
your
work.
money in their wallet
Right.
That's what accounts receivable is. And so, and I think once you start to think like that, I think what a lot of people start to connect the dots of is like, hey, if I told you that, hey, that person sitting over there is holding $1,000 from your bank account, then you would probably have a different perspective about, how do I approach this? Like, how do I start to think
Yep.
about this? And so
Yep.
I usually, start, business owners off of thinking that way of this is money that should be in your bank account, but at the moment it is sitting in somebody else's wallet. So how serious do you want to take this?
Yeah, that's good. And I think this goes back to the comment that I made a few minutes ago on being able to kind of connect the dots, right? On cause and effect. I think sometimes people are, specifically business owners, are afraid to follow up, to collect on money that's owed to them, that they rightfully deserve, that's theirs, that they've done all the work to earn. Because sometimes I think the dots aren't being connected to where this money you're not collecting is having a direct impact on the ability for you to run your business effectively. So basically, the $1,000 that is sitting in the account of, or the wallet of this person that owes you, is money you can be using to pay for your employees, is money that you can be using to pay for your rent, is money that you can be using to buy supplies in your business. Like, this is cash that you could be using to run your business that is not available because you have not collected it based on work that you've done. In some cases, you've already incurred the expense related to performing that service, whether it's your time, whether it's the products that you've used, and now the cost has gone out to fulfill this service, but you still haven't gotten paid for it.
That is a common, like I said, issue that a lot of people are having. Like they're running in the cash flow. So I
Mhm.
mean, and I think it's great to have that perspective. I'm curious for yourself is when you think about, you know, when you think about what's a really good thing that once people understand what AR is, like then how do they approach, just managing it? Like where do you usually tell them to start thinking?
Ooh, I say cash is king and AR fuels your cash. Like, without AR, there's no cash, right?
Hmm.
So you can continue to put money into your business continuously, like money from your own personal account, but there's nothing like a business that is healthy and a business that can sustain and run itself. So for me, I think where I've seen, and I actually spent a good amount of years in a last assignment that I did, helping people collect on accounts receivable. And one of the things I think that really made sense for people once you put it into context was saying that this is what you need to turn around and actually run the company. If we're not getting paid, we don't have enough money. We will eventually run out of money to be able to run the company. And this was a Fortune 100 company. So I can't imagine a small business that makes $600,000 a year in revenue, and let's say you have a 20% past due rate or a 30% past due rate, or you're just outstanding accounts receivable that's late, that's not being paid. It has a much more significant impact on your business than a company like that's a Fortune 500 company or Fortune 100 company, and they still take that relatively serious to where they have entire departments that are focused on collecting cash.
Yeah, I mean that's a really important point because I remember working for, like I said, some of the world's largest companies, and there were teams that were dedicated to collecting. And I remember sitting in a conversation with the CFO of a $24 billion company. Well, it was $24 billion segment of a larger company. And
Mhm.
one of the top conversations was, hey, who still owes us money? Making sure we collect, because if we don't collect, then we need to go do some type of financing arrangement, or we need to factor receivables. And we were trying to figure out all that because I'm like, even for a business segment that is $24 billion, AR and collections is a high priority. So one of the first things that I learned from that experience, and I'm curious to get your thoughts on, is, around developing a process. Because I usually
Mhm.
tell business owners, if you're going to be good at collecting on your receivables, there has to be a process. So how do you start to like really approach when it comes down to looking at a process? Like what are some of the factors that process should have in it?
Yeah, I think that's a good question because I think the foundation is critical. I'll say number one, I think is just having a very clear understanding of what the payment terms are, the agreement, right? So what does the customer understand that they need to do when they get this invoice? Have you agreed per the contract that they need to pay immediately upon receipt? Have you agreed per the contract they need to pay in 30 days, 15 days, whatever those terms are? But those terms need to be very clear. What I've oftentimes seen, especially at larger companies, is that sometimes the customers are not clear. The customers have their own terms or they want to pay on their own terms again because everybody's trying to manage their cash flow, right? Everyone's trying to manage their money and keep their money as long as they can for themselves. So the customer's trying to kind of watch and manage their own cash flow. You're trying to get paid, and there was never really an agreement on what the payment terms were, which now leaves this kind of gray area. And oftentimes, what happens is it doesn't really work well for the person who needs to get paid because if there are not clear terms about what exactly the terms are, like when do I need to pay you, is there a penalty if I pay, pay late, is there an incentive if I pay early, whatever that is, I think that's the first thing I would say, like you need to establish that before you go anywhere else.
Yeah, so I think that's a really good point. And I always tell people when they come down to business is you got to have an actual understanding of what is supposed to happen. Like, what do you
Mhm.
expect? What do they expect? And do those two things line up? And one of those, and it's something I learned a lot with working with lawyers and and supporting law firms. And that's one of those very clear things that we drill in is there a mutual understanding about what is supposed to happen? And I think you made a brilliant point about the terms. Like, how much should they be paying and when
Mhm.
is the payment actually due? um the next thing I would add to that process, and this may seem very elementary, and sometimes people laugh when I say this when I speak at different conferences or even in our the small business CFO group, is I would say is very basic. You have to have a process for actually billing your clients because
Mhm.
yes, you did the work for them, but that doesn't actually mean they know how much to pay you or they know when to pay you. I mean, it's not like it is not this, small town arrangement. Like, for example, when I go to my barber, I don't know how much a haircut costs. I know that I give them $40 every time I go. And because it's a very personal, small transaction, we can get away with that. But if you're running a full-fledged business and you're providing services and your customers don't know how much to pay you, they don't know when to pay you, they don't know what types of payment you accept, which should all be information that is on your invoice. Because the number of times I have talked with a business owner and I asked the question of, hey, when do you send invoices out to your clients? And they say, well, we haven't really done it in the past 2 months. I'm like, what? Like, you've been doing the work, but you haven't been asking them to pay you. So again, you've done the work, you have earned the money. Your money that should be in your bank account is sitting in somebody else's wallet. They're not going to give it to you unless you ask for it. So I would
Mhm.
say a very basic step in your process, have a process for getting your billing done. I mean, even for our firm, like I was looking at, our processes and I realized like, hey, I need to do a better job of setting the goal. So the goal for 2023 is I want a 95% on time delivery for the billing, meaning whatever the deadline is to send the bills out, we need 95% accuracy every single month. Now, I would love 100%, but I know every now and then something comes up. There may be an invoice that gets behind, but we should have a very, very accurate process on invoices go out on XYZ date and they need to be going out so the clients know how much they need to pay us and when they need to pay it.
Yeah, I think that's really good. Setting clear goals, I think, as well, is going to kind of help bring you back to, you know, basically help you assess, are you headed in the right direction? Like, are you achieving the goals that you want to have? The other thing I think that you mentioned, Terrell, when you talked about just actually following through and actually sending the invoice, I think the tools that you use are good. I'd seen something on social media a couple of weeks ago where a business owner was still using like paper mail for sending invoices. Okay, I'm just gonna say this: the longer, or the more, I guess, the more antiquated the process you have of billing your customers, the longer it's going to take for them to pay you. And again, we're going back to the whole cash flow thing, right? Where we're saying you want to collect on the work that you've done, you want to collect on it as quickly as possible, especially if you provide or you sell a product and you've already incurred the cost related to producing or selling that product, and now you still have this cash flow outstanding. So I would say the tools that you use are extremely important. I would personally recommend using an online tool that where you can generate the invoice. In a lot of situations, you can use like a recurring invoice. Like for example, we use Dipsado. There's a lot of tools where you can basically set it up to do the billing for you on a monthly basis. So I think going back to what we've talked about, Terrell, with just defining the payment terms and actually sending the invoice, you need to understand, hey, what is the best tool for me to use to actually make sure that I'm getting, clear AR terms outlined in my invoice, and also that I am very, 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 very sure that my invoices are going out for the work when it's done.
Absolutely. Yeah. And I think that that tool piece is a really good one because there were some, statistics that I saw, and I don't have them exactly right in front of me to quote them verbatim. But I will say is that what I have seen is that, you know, companies who tend to have more, I guess, say, electronic options for people to pay, like when you
Mhm.
send your invoice, if in the invoice there is a link that they can click on to make the payment, it's there is a significant increase in the
Yeah.
speed in which people pay and the number of people who quickly pay, because
Yeah.
that's where I think it becomes an issue for some people of, if you're sending out, let's say paper checks, or let's say even if you're emailing the invoice to them, but
Mhm.
there is no way for them to directly make the payment, then for you, it becomes difficult for you to know who has paid and who hasn't paid. So now you got to go back through this manual process to see which invoices have been paid. And I get it because that's part of the reason why some businesses get behind on invoicing because they, let's say, they missed a month or they missed a week and they're just like, well,
Mhm.
now I don't know which invoices are paid. If I send them an invoice and the client says, well, I already paid that, like I don't have my records together to be able to tell them, yes, you're right, or no, you haven't paid that, you paid this one. And I'll be honest,
Yeah.
it's happened in our firm as well.
I agree. I want to say two things. I can't, well, I can. There's probably 5 times where a customer in the past has said, hey, I mailed that check. I put that check in the mail and then the check got lost. Can you imagine somebody losing $50,000? Like, I put that check in the mail, it got lost. By the time we found out that the check was not, didn't arrive, by the time we canceled it, it took another 30 days for us to get another check. And, I will say, when you were talking, Terrell, about just like giving the electronic payment, giving options on payment, I remember when we first started, we were only doing payment like deposits, ACH deposits for our invoices because we didn't want to pay the QuickBooks, well, the QuickBooks rate and basically rate on the invoices was higher than what we wanted to pay, and there wasn't an option to basically have the business owner absorb that cost. So we were only offering ACH, and I remember we did have definitely delays in invoice payments because if people can't pay with anything other than ACH, especially in a situation where credit cards are, it's so quick to issue payment that way. We definitely saw a change when we started to offer credit cards as an option. And one of the things that it actually forced us to do was to find a tool that worked better for us on pricing. So that's why we talk about, like, the tools are so important, because you need to kind of think about how are you making the customer experience as easy as possible for them to get payment to you.
Yeah. And I think a lot of that comes into, depending on what system you're using. And a lot of systems now have moved into doing some type of invoicing and some type of accepting of payment. I know for a lot of the law firms that we work with, they're working with systems like Clio or systems like My Case, where, you
Hmm.
know, a company like My Case, they went out and they literally bought another company that processes payments. And then you also have, when you move into some of the POS systems, like some of the restaurants or like the physical product type businesses,
Hmm.
where if you do a big order, you can actually create a invoice in your POS system and you can send that out to the client and have them, you know, pay that online, or they can put in their credit card, or you can accept Apple Pay, Google Pay. They can do what, Melio, a bank transfer, ACH, like however
There's a
they want
lot
to
of
get the money
options,
to you.
clearly. There's lots of ways to pay.
Yes. I mean, because I was looking at that even today. Like, I mean, we're in the process of hiring another staff member, and we have a couple staff members that are in the Philippines. So we're looking to hire another person. Now, I don't want to go and convert US dollars into Filipino dollars. And so one of the things that we're using is, when the invoice comes to us and you click on the link, it gives you four different options that you can use to make your payment. You can use Melio, you can do ACH, you can use credit card, and there's another fourth option that I haven't used. Or you can use Zelle. And
What
you know,
is
there are all these
Milio?
different options. Melio is a
Milio, I've
company
never heard of
that it's kind of like it's a payment processor is what it is.
it.
I mean,
Okay.
they kind of
Is it
sit
like
in
a
the middle.
Stripe?
Um, I guess you could say they're got kind of a bank, more like a
Oh,
bank,
okay.
less
Okay.
like Stripe, more like a bank, because
Got it.
you can use them for they're getting a bit bigger in the accounting space. Um, and so, but what I'm saying all with that is just having that electronic payment. When they sent me that invoice, now, had they not had any links on there and they sent me an
Mhm.
invoice, I'm like, if I got to figure out how to pay this in Filipino dollars and I got to figure out how to go through all the hoops to get you the money,
Right.
it's going to be a long time before you get paid, because that's
Yep.
not at the top of my priority list. And I do
Mhm.
think that that one is something that a lot of times as business owners, we tend to forget. Like, because because our money that should be in our bank account is in somebody else's wallet, it may be top of mind for us, but it is not
Mhm.
top of mind for the person who needs to pay us. And
Absolutely.
so I think in that is also a good helpful tip with some of the tools that you use, is just having one that can send automated reminders. Because
Mhm.
sometimes people do forget, like, if you're dealing with other business owners, they got a ton of other stuff on their mind, and they're not like intentionally trying to, you know, forget about your invoices. Now, if they are intentionally trying to forget about your invoices, we'll talk about that in a little bit. But for the most part, I do think, you know, if you're doing a good job of picking good people to do business with, sometimes they just need that reminder. And once they get that reminder, they're like, oh, you know what? It slipped my mind, had a ton of things going on, but I'll get it paid right away.
Right. I agree. So yeah, I'll wait until we get to that section. But I do think that the point that you made on the tips, definitely. I think ultimately the point that we're trying to make here is when it comes to the tools that and software you're using, you want to consider the cost of whatever it is that you're doing, right? So, like, does it make sense financially for your business? Shop around, decide what you want. Like, for example, we used Dubsado. We talked about how we switched from QuickBooks because the rate was a little bit higher than what we wanted to pay. We switched to Dubsado. We like the fact that it sends the automatic emails. We like the fact that, well, I like the fact that I can store the contract there. I like the fact that I can set recurring invoices. I'm sure I could do all of this in QuickBooks, but I just felt like from a usability standpoint, Dubsado was easier for me to use. So you really just need to shop around and figure out what makes sense. I think the second thing, Terrell, that you mentioned is really just the variety of options. And I think it goes back to something that we had to learn in our business as well is we were thinking about what we wanted, like you said, but really it wasn't at the top of the mind for the customer. So the quicker you can give them options, or the quicker they can have those options to pay almost immediately when they see that invoice, the better. But like if they get that invoice and then like, oh, well, you can only pay with ACH. How many people actually know and memorize like their bank account number? Like a lot of people don't know what their bank account number is. A lot of people don't know what their routing number is. So you want to make sure that you're basically breaking down barriers to make sure that you get paid as quickly as possible.
Yep,
So
no, I
that
totally
was,
agree.
yeah, go ahead.
I totally
Something else
agree.
you want to say?
No, I do think, I want to talk about some of the tips that you have seen because, like you said, you mentioned that you used to work in this area, and you mentioned that you did a lot of activity in this space for a some really large companies. What were
Yeah.
some of your key takeaways from that experience?
I think just assuming the best in the best, assume the best in the customer until they give you a reason not to. And I'll tell you what I mean by that.
That sounds like there's a story behind it.
Yeah. Oh, yeah. There's absolutely. I'll tell you a good story and then I'll tell you a shady story. How about I'll start with
Okay.
the good story. So the good story was we had a customer who was a smaller company, mom and pop, like him, his dad ran the company or whatever. So they were based out of Canada, and this was the first time that they were doing business with us. They spent about 70 grand with us. And when it came time to collect the invoice, we were not getting, feedback. I think it was like the invoice was maybe 40 days or whatever. Then 50, then 150. And usually my job was to come in and get involved. I'm not gonna lie. I only got involved when those invoices were stopping me from actually being able to make money on my clients. So like they came in and they wanted to order more product, and because they had not paid us this invoice and it was outstanding for 150 days, we weren't allowed to ship anything else to them, right? Which again makes sense for whatever reason. But basically with these guys, reached out to them and said, and this is what I mean when I say always assume the best. What I have seen that has worked very, very well for me, and I actually have started using that, and I've used that with our clients in the past, is when you send out an email to a customer who has not paid you, who's past you, you always want to approach the email as though you have missed something as the business owner. Like, hey, I saw that there's an invoice outstanding for $70,000. Is there anything that you need from me? Like, did I maybe it got lost in the junk, in the spam? Like, is there anything that's outstanding? Do we owe you something? Like, do you have a question that we haven't answered? Is there anything that you're missing from us that we need to provide to you to basically pay this invoice? And I think what that approach did was he actually was able to be transparent and came back to me and said, hey, like the market has been, this is like during COVID, like, hey, the market has really seen a turn with oil and gas, and some of the deals that we were waiting on kind of fell through and we lost some of that stuff. So really, we don't really have the ability to pay this full $70,000 right now because we're really struggling. But hey, if you have the ability to kind of be flexible with me, I promise to pay it all back or whatever. And kind of our counter was, well, hey, what can you do? And we offered a payment plan for this person. So they ended up eventually paying off the invoice or whatever. I think it was over a 6-month period was the compromise. But for me, that approach, I think, really allowed the customer to feel comfortable to be honest and say, hey, you've given me everything that you can, or you have, this is kind of my situation. This is what's going on. I will go ahead and basically in good standing, like I'll try to pay this as much as I can. And I always say, like in situations like that, it's better to collect some of the money than not collect any money at all. That's my philosophy. So at least you have a payment plan and you're working with this person. So that's the good story, legit story.
So before you go to the other story, let me try to summarize what I heard, and you can correct me if I heard this right. So a couple
Okay.
of takeaways that I heard in there was I think one is not immediately assuming the worst. Um,
Exactly.
and also, when you talked about like the how old the age of they are, just that having some type of AR aging schedule to where you can
Hmm.
see which invoices are 30 days old, which invoices are 60, which ones are 70, 80. And then I think also having a follow-up process, because I do
Mhm.
think that that's something that I have seen a lot of companies miss is they don't have a cutoff process to where if this invoice gets more than 90 days old, hey, we don't need to keep doing more business with them. And that's something
Yeah.
that I see a lot of businesses, they just bypass that where they're continuing to spend a lot more time on people who aren't paying. And I'm just like, okay, all right, when we look at that, we're like, why are you still doing more work for this company if they haven't paid you for the stuff you did 3 months ago? Like, what gives you the confidence that they're going to pay you? So, I picked up that one from what you were saying as well.
Yeah, and that's interesting because I think a lot of large companies run into that point that you just made about still doing business with crappy clients that don't pay on time. Um, and I think some of that is just because I don't know if I think it's a lack of it's a poor system. Because even at the Fortune 500 company scale, it's a poor system because we're doing a $6 million deal. I think I remember, especially during COVID, like $6 million deal, but the customer hadn't paid us $4 million. So I mean, at this point, it's like they owe us 4 million. You want to do a $6 million deal? That $6 million will probably most likely turn into $10 million based on their track record. Um, and so I think like really not having that short sightedness, but really thinking long term, like, hey, is continuing to do business with this customer really in the best interest of my business? Because I think sometimes people just see, oh my gosh, like revenue. Hey, I get this deal. But if you can't convert that revenue into cash and actually get paid, like it does nothing for your business other than a pretty number on your, P&L that you're eventually going to have to write off as a, receivable or bad debt receivable or whatever, which is basically, hey, I tried to collect it and I couldn't. Um, and you've put in all the effort. And I think this is something I think that I always like to kind of hammer in, like when we talk to, even like talking to people in the small business CFO program, like sales are important. Profit is even more important, right? If you think about it from a P&L standpoint, at least like Terrell, my view here is you've already incurred, like, and this is something that I say often, like you've already incurred the effort, the time, the cost of the product to do this work. That's done. Like as a business owner, you've put all that effort in, you built the product, then you go and you invoice this customer. And now that invoice is outstanding, which means that you're carrying cost on your income statement, but you have the revenue that you're reporting, but in terms of actually tangible cash, you have not gotten payment for that, which means that you're carrying costs, but you actually don't have the associated revenue or payment to cover that cost. And so I think a lot of times, like people don't really think through that or think about that. And you got to think about the whole picture because as much as you want to sell and as much as you want to make money, you really need to think about what does this do for my bottom line?
Yeah. And I think that makes a lot of sense because a lot of small business owners are doing their accounting based on a cash basis, meaning
Yeah.
they recognize the revenue when the payment comes in to where they're
Mhm.
like, hey, we sent out on an accrual basis, we sent the invoices out, we look profitable. But when we look at things on a cash basis, like your
Yeah.
bottom line looks negative because all these people haven't paid. So I think that's a really good point. And something else that I often that you said that made me think about was when it comes down to actually taking the time to actually communicate with the client, because I think that's something that I've overlooked in the past as well. And I'll be completely transparent. When we started the firm, there were some people who had gotten, one of our largest customers at the time had gotten behind. And I just was nervous about calling them and asking them for payment because what if they don't pay? What if they go somewhere else? And I was naively just telling myself, hey, they're going to pay eventually. And I'm just like, you know what? I had to get out of that mode of really just saying, like, hey, have you actually had a conversation with them? Because if you're just trying to convince yourself that they're going to pay, but you haven't actually talked to them, then you don't know what's going on. And so it wasn't until I actually picked up the phone I gave them a call and I said, hey, here's what's going on with the invoices. And whenever I had to do that, they would always say what was going on. They would tell me the situation, and then they would say, hey, here's my plan to pay. But it seemed like if I didn't ask the question, they weren't going to volunteer the plan to pay. Now, I would say long term, that's not the best kind of clients you want to work with. But I'm like, if those are
Amen.
the clients that you have, because I do think when you're starting a business off or when you're early on, or just sometimes you're not at a point where we weren't at a point where we could dictate like, hey, we don't want to do business with these type of clients, these type of. Now we have that luxury of doing that because we built up some reserves so we can do that. But back then, I was a little nervous about following up on past due. And then I was just like, this isn't going to work because we're trying to hire more people and I need that money so that I can pay these people's salary. And we can't keep doing this cycle to where now it's just like, hey, here's what the process is. If they get behind by 30 days, send them a nice email. 60 days, they'll get a little bit more direct email. And then if it goes above 60 days, then we're just like, all right, I need to hop on the phone with them and I need to give them a call. And I do think also is, and this is something that I've seen a lot of service businesses struggle with, and I used to struggle with this myself, is when a person gets past 60 days behind due, you're not getting the priority level service from our team. Like
Mm,
the level of urgency we place on supporting your engagement drops down the list. Because if you're not paying your invoice, I'm just like, we can't keep putting you above the people who are paying. And I
that's
do
good.
think that becomes a very, very, I guess you say, that's how you know you're operating as a smart business owner, is what I tell myself, versus operating as just going through the motions.
Yeah, no, that's really good actually. And one of the things that I just thought about when you were talking is there any value? I kind of want to get your thoughts on this. Is there any value in communicating that? Maybe not saying, hey, your stuff's going to the back of the line, like you're not getting anything done. But is there any value in kind of maybe communicating with the client to say, hey, you haven't paid, especially when it comes to bookkeeping, because you're reconciling those transactions every month. The work's being done, their accounts, their financials are in line,
Hmm.
but hey, they haven't paid you. So, do you think that it makes sense to kind of communicate that, like write an email and say, hey, based on the fact that you're, 2 months behind, hey, we just want to let you know you're
Oh,
not
I'm
going to
not
be
writing an
prioritizing
email.
that.
I'm gonna pick up the phone and call you.
You're just gonna
And
be
I
like,
think
hey, we're
it,
gonna put this on hold for right now.
but no, I think it does make sense. I mean, to one is, I'm picking up the phone to call because I don't think that that's something that should be handled via email.
Mm,
Because I do think, cash, debt, and payments, all that type of stuff, I think is personal to a lot of people.
yeah, that's
So
true.
I wouldn't handle it via, an email or a text message. As I would just pick up the phone to understand, hey, what's going on? There's sometimes some client called us and said, hey, we're having some cash flow issues and stuff like that. And I was like, okay, I understand. So what we will do is we will provide a limited scope of support for your business, probably the bare minimum to help,
Hmm.
to because we're not going to still provide the same level of service, because if we're providing the same level of service, that means we're still billing you at this higher level. And I'm like, if
Exactly.
you're having cash flow issues, let's downgrade the level of work we're doing for you right now, which means that's a lower monthly expense for you. And it is less time that our team is spending on that. So I think it is very fair to have that conversation with them. And, like I said, I'm not just coming out and saying, hey, you haven't paid your bill, so we're going to throw you on the back burner. It's like, hey, let's understand what's going on. And then also
Yeah.
sometimes I do think for some people, it's just like, hey, let's say, for example, there was a client that I knew, and we're doing the bookkeeping, so we can see the numbers. So I know what they're doing from a cash flow standpoint. There was a client that I saw, they were running they were running lighter on cash. Their sales were going down. They were going into a slower part of the year for their business. So I came back to them and said, hey, we're doing weekly calls and weekly financial reviews, that is at X price. It costs, let's say $2,500 a month for that. Based
Mhm.
on what's going on in your business, you guys don't necessarily need that. Let's cut it back to doing it maybe monthly, and we'll still provide the reports. And instead of us meeting on a weekly basis, we'll just update this report and we'll make it available to you. So, what we would have covered in a weekly call, you'll get a quick email on, hey, here's the flash report update. So, what that does is it frees up my time, it frees up the team's time, to where now our service price can be reduced to something that makes sense for where they are. And it frees up our time to go do other stuff so we can make money in other areas. So I do think that you should have that conversation with with your clients, because if you want to have a relationship with them, I think you do have to really lean forward into those type of conversations.
Yeah, that's good. And I think just even I think it comes back to the point we made of just assuming the best, right? Assume that your client wants to work with you. Assume that they're willing to compromise because, like, for example, the idea that you gave where you're like, hey, your business doesn't need all the bells and whistles based on where you are. Here's an option, here's an alternative to adjust. I think sometimes business owners feel, which as business owners, like, I can relate. Like, I think sometimes it's easy for you to feel like, man, like you're not being appreciated, or you feel like, hey, we agreed on this. Why are you changing your mind now? Why aren't you honoring and doing what you said you were going to do? But honestly, the reality is, like, things happen. Life happens. Like, we've had situations where some of our clients have been challenged on cash flow, but when we worked with them and we stuck with them, and their business grew and they came back and they were fine, and they compensated us for that. And so I think really just being discerning about the type of clients that you do work with, because what I just said is not something that we've learned by experience. Like, it's not everyone that gets that level of engagement, right? Some people are just trying to take advantage of the system. They're trying to get you to do stuff for them for free, and there's no sort of understanding on, hey, basically paying for your time and the value that you add. So I think really just being able to understand, like, as a service-based business, like, how do I handle these situations when they arise? And I think it goes back to what we talked about just having the processes in place. Because if you don't have those processes in place, you're faced with this, where you're like, man, I want to deal with this awkward situation. And I think, like, that example that I gave has really definitely helped me avoid the awkwardness, because it kind of leaves an open space for you to come to me and say, hey, this is what I'm dealing with. Because now I'm going to give you the shady person example. The shady company example was where we again took the same approach, sent that email about, hey, is there anything missing or whatever that we need to provide. The guy responds, again, another small company, and says, hey, we already sent the check. We sent the check. We sent the check. He's like, the check was in the mail. The check was in the mail like check was in the mail 2 weeks ago, whatever. And I'm like, okay, cool, perfect, thank you. He's like, yeah, it's in the mail. 2 weeks go by. I'm like, all right, I know this check is coming from Dakota, like North Dakota, but it does not take 2 weeks for this check to reach and arrive. So we follow up, and send a note, hey Josh, I'm just giving this random name, hey, any word, have you seen this cash on your end? He's like, yeah, on my end it shows that it's deposited. Have you guys not received it? I'm like, no, we have not received it. And then usually, now you have the option to basically have a tracking number via mail. And so followed up, he's like, yeah, it says that it's deposited, it's received. So we go on USPS or whatever, I think it was UPS or USPS, put in the tracking number, and it says that that thing was created, but it never left the location. So I guess he created it. It was sitting there, and I don't know, maybe he didn't have the money in his bank account, and so he just delayed it and never actually put the check in the mail. So we sent him a screenshot of the USPS, and we're like, hey, it shows that it never left. Like, what's the deal? And he was like, oh man, like, I just had so much going on. I must have forgotten to send it. And I'm just like, now you can't backtrack because you lied and said the money came out of your account. Like you said, you're showing the money withdrawn from your account. So from that day onwards, That gentleman was on the list of people that were getting AR statements. I'm like, you guys need to make sure that this man every week has an AR statement. He knows how much he owes. And now he's no longer, we actually pushed him to do wire transfers,
Hmm.
because it was one of those where it was like, this check is always going to be coming from now till December. And so you really need to just be able to understand in those situations, like, how do you uniquely deal with those situations where you have difficult
Hmm.
customers like that, where you're still doing business with them, but maybe they're not the best or the most honest when it comes to getting paid.
Yeah, and I think those are some great conversations because I think that is something that has come up, in the small business CFO group where we talk through, how to handle awkward conversations about
Yeah,
money with clients. Also, how to deal with crappy trifling clients.
yeah.
Also, how do you protect your bank account when you might have a shady client. And so
Yeah.
we talked about that and really go in details, and I'm realizing that is more and more of a problem that
Hmm.
businesses are facing. But I will
Yeah.
say is, we could talk about this for a really long time. But I
We
think
could.
just to give a quick wrap up, because I do want people to hear about this week's tax tea. So to give a quick wrap up, I do think the first thing I think is really having a process is what we talked about. Is when it
Hmm.
comes down to your AR, you need to have a process. Like, what's your process for getting the invoices out? What's your process for following up? What is also your process for actually collecting the payment? Leveraging systems and leveraging the tools that exist out there of being able to get the payments out, being able to get the automated follow up emails sent out, and you can schedule those for, let's say, 5 days past due, 10 days past due, 15 days past due, and so on. And then also is using technology to accept multiple types of payment method, because that could increase the fact of the rate that people pay. And then some of the best tips I think of reviewing the AR aging is knowing how old your receivables are. I think also being able to watch the trends and grade your clients. Who are your
Yeah.
A type clients? Who are your F type clients? And also making sure that you're adjusting the priorities. If you have an F client who pays horribly, we need to rediscuss the terms. And we need to rediscuss how they make payment. We need to rediscuss how much they're allowed to buy from you on credit, because at the end of the day, what accounts receivable means is that somebody else has your money in their
Hmm.
wallet, and that money should be coming to you. But for whatever reason, that money is not in your bank account because it's still sitting in their wallet. So I think that is a good recap. And I am interested to find out what happened in this week's tax tea.
Oh, are you ready? Drum roll for this week's tax tea. Listen, you think you've seen it all until you meet the man from Calabasas. All right. Is that the correct way to say it? Is it Calabasas, California?
I
Is it
guess it's
Calabasas?
Calabasas. I mean, it seems like whenever someone says a name like Calabasas or Kalamazoo, so it's like that they're real places, but just the name of it sounds like this is going to be interesting.
Exactly. So, okay. This story on this week's, let me start. I gotta hype up my energy for this story. On this week's tax tea, okay? All right, what you want to know first? What you want me? You want me to give you the rundown? Where do you want me to start on
So I
this week's
want to know,
tax?
first off, I want to know what was the penalty that this person got.
17 and a half years in
So this
prison.
person is going to prison for 17 and a half years.
Yes.
All right. What were they found guilty of?
They were found guilty of stealing $35 million from
Wow.
about 100 people. 101 people. Now, I'll provide context, okay? Because I know people are doing
Okay.
math like, man, that's a lot of people. That's a lot of money. Okay. This gentleman was a professional athlete at some point. I think he did maybe the Olympics or something. He was some sort of like athlete. point is, I guess that opportunity, he was originally, I think, from the Philippines. It had given him the opportunity in competing to kind of meet some influential people, people that, had the financial means to be able to do investment in startups and different things like that. So when he retired, he moved to California and basically started telling people that he was starting a cannabis vaping company. This was in 2000 and I think 19 or 18. I don't remember the exact time, but basically going around telling people, hey, he's going to be starting a cannabis vaping company. There is this really super innovative, healthier alternative to cannabis for this company coming out of China. And basically, he was going to be partnering with them to be able to provide those cannabis vaping pens or whatever they were to the market in the United States. So basically did a very casual crowdfunding initiative, raised capital for $35 million for this company that did not exist. Okay. So meanwhile, okay, now I gotta say, I don't know if he was doing this like where it was a scam from the get-go or if he really had good intentions to really start this cannabis vaping company and it just backfired. I don't know that. However, he continues going through this process, collects that money, proceeds to provide fake invoices, makes up these companies that he's working with, these vendors and suppliers, provides fake documents of quotes of bids from the companies that he was working with. I think that a couple of them were in Asia. Provides fake bids, provides fake documents, fake financial documents of projections and stuff like that. And basically forges all this stuff and starts sharing it with the people that I guess invested the $35 million. So,
Ooh.
yeah. So completely shady. Very bad. The worst part is that money that he took, he actually was using it to finance his lifestyle. So he was traveling, living his best life, bought a house in Calabasas. I think that's where the Kardashians live. Bought a house in Calabasas. Was taking trips to Las Vegas every 5 minutes, financing his lifestyle, just living a really lavish lifestyle with people's money that he was supposed to be using to do this cannabis vaping pen business. And there was a situation where the one of the guys who was actually, this is the really sad part, a couple of the people that had invested in this, their money in this, were actually starting to face financial challenges. And so some of them came and they were like, hey, like I gave you this money as my friend, because it wasn't like I don't think he'd actually gotten any formal investors, like angel investors. I think these were people that he knew, people that he was friends with that were just like, hey, you know what? Cannabis is really growing. It's a growing industry. I'll take my money and I'll take my 401k or whatever the money is. I don't know. I'll put it in here. So there was one of his friends, quote unquote, because I don't think you can be someone's friend and do this to them. But one of his friends approached him and was like, hey, I invested that money. Like, what's going on? Like, I haven't seen a return. And he's like, oh, we're starting to give one reason after the other, forged documents to explain that as well. This friend went to go do some digging and found out that the guy had actually been sued on claims of fraud by another company. And they had settled on a $325,000 settlement out of court. Well, when he approached him with this information, the gentleman then forged documents, sent it to that friend, and actually said, no, that's not correct. What actually happened is they owed me $325,000 and a settlement payment was made to me. So he was doing all of these
Wow.
shady things and basically spent the money. The worst part about this situation is the forged documents. The really, really worst part about this for him is he is now going to be ordered to pay $32 million of the money in damages, basically back to these people that he took money from. And he's going to prison for 17 and a half years.
Wow. I mean, that is a crazy story. Now, where I know a lot of people may hear that and say, okay, all right, here, that just sounds like this unbelievable story. But, it sounds very, very similar to a lot of discussions I've been having lately with people as it relates to uh, XPX or whatever
FTX.
Sam Bankman-Fried's company name was, where it's a
Yep.
very similar scenario where you have a
Yep.
person who started a business. Now, Sam Bankman-Fried, his situation was even worse fraud. Where I do think where you have people who start a business and it's usually in this hot up and coming area, and they say, "Hey, we're doing XYZ." When I tell people, if you're going to invest in anything, make sure you vet the idea of how viable is this, like, really, because I think that is something that a lot of small businesses, that they deal with. Because a lot of small businesses always often ask me, like, "Hey, our business is doing well. Are there other things I can invest in?" And so they just start throwing money at different stuff, and I'm just like, "Hey, one of the questions that I ask them is, who is going to be doing the accounting for the business that you're putting money into? Like, who's the accounting firm that they're going to be using?" Like, some of our clients that have investors or they have, partners, one of the questions that I always ask them before we start is, are there any other partners we need to provide financial reporting to? Because we want to be able to share that information and say, "Hey, here is how the company is doing." And that gives the investors some comfort. So I'm like, if you're looking to invest in any company, is you want to know who is doing the accounting. And if they say, "Oh, we have XYZ firm," you want to at least have an email introduction or a phone call with that company to know that, hey, that company actually exists, or do a quick Google search. Because
That
I
part,
feel like
yep.
in this situation, that could have been resolved to where if this
Exactly.
guy, if this friend had asked before I give you the money, like, "Hey, you're raising a lot of money. This is a heavily regulated industry. So, and you're talking about shipping products from Asia to the US and distributing them. One is, I want to see the actual product." like,
Exactly.
like,
There
I
had
want
to
to see
be
the
some sort of
product.
sample. But I mean, the fact that this guy forged things probably doesn't, I wouldn't be surprised if he forged. Like, he came up with a sample product and was like, "This is it. We're gonna have 50,000 units in by next week." And I don't remember what period this was, but if this was during COVID, it was probably very explains why he got away with it, because you had all the supply chain issues, right? So you could have been like, "Hey, this is stuck on a boat. Hey, remember all those stuff that was stuck on a boat coming from China?"
Yeah,
Could be
that
like,
is true.
that stuff is stuck on a boat. But I think your point, Terrell, is so important. It's just the financial oversight.
Absolutely. Yeah, I would say for anyone, I mean, which that just reminds me, with the number of people that I've seen hurt by bad investments, we're probably going to have to do another episode where we talk about that, of how do you go about vetting investments, because that's something that we work with a lot of. Some of our clients reach out to us like, "Hey, we need to do due diligence on this company that we're thinking about buying, or we're thinking about bringing on investors." And there in some companies we've helped them bring on investors, and really helping them navigate that due diligence process of what information do you need to provide to them to give them the comfort that this is a real business. There is something really behind what they're investing in. So we'll probably do another episode on that, and we'll do a deep dive in the small business CFO group. And if you're listening to this and you've heard us talk about small business CFO group, definitely check out our website. You can learn a lot more about the small business CFO group, where we go into a lot more detail in some of the tactics and the actual plan of execution of some of the topics that people have here, because a lot of people follow up with questions like, "Hey, you mentioned this. Well, what do you mean about this?" Well, in the small business CFO group is where we dive a lot deeper into stuff like that. So thank you all so much for tuning in. Until next time.
Hey, it's your girl Tia Robertson. I'm the host of Entrepreneur Insider. Right here on RETV every Thursday at 6 p.m. Eastern for entrepreneurs and news that you need to know about. See you there.
Welcome to What's Going On? My name is Demita Joe. Each Wednesday, you can find me here at 3 p.m. I'll be over here discussing different things that are going on and try to bring you a boost of positivity for your week because we all need this. We're going to share some feel-good stories. We might find a hometown hero. We may take a look at some trending topic. And sometimes we might even find a lesson in a not-so-warm and fuzzy story if we can. I'm Demita Joe, and I'll see you guys on the next episode right here on What's Going On?